I wanted to record a couple of the journal entries and their related adjusting journal entries just to kind of demonstrate and maybe get you, some of you that are having a little confusion, back on track. So I'm going to choose, here's your information systems case. I'm going to choose transaction C. On the first day of August, $6,000 of rent on a building is paid. So the company is paying cash for renting the building for months of August and September. So let's kind of review our debit and credit rules real quick. We know the basic accounting equation is assets equal liabilities plus stockholders' equity. We know the two subcomponents of stockholders' equity. Investors invest cash, in exchange receive common stock. That makes that part of the equity of the shareholders then. We also know that profits or earnings belong to the shareholder. So retained earnings is a component of stockholders' equity. So again, we have our assets. Those are the resources of the company. Basically, it's the things the company owns. We have our liabilities. Those are the obligations or debt of the organization. So the company's resources, right? We have the creditors that have rights to those resources or the assets. So our creditors have rights to the assets. And then over here under stockholders' equity, we have our investors who also have rights to the assets. So it's another way of looking at the balance sheet equation. Creditors have rights to the assets and our investors have rights to the assets, and that's conveyed on the balance sheet. Now also under retained earnings, now this isn't a component of the balance sheet, but it is hidden in this equation. We know that earnings or net income increases retained earnings. So revenues have a positive impact on earnings. So it's a plus. It increases earnings or earnings retained. Expenses reduce earnings, right? They're a negative component on the income statement, so they reduce our earnings. And then if we distribute earnings, that's called a dividend. And dividends then reduce retained earnings. So under retained earnings, we have three elements of financial statements that have an impact on earnings. Revenues increase it, expenses decrease it, and dividends decrease it. So just a quick review of our two accounting equations. We start with our balance sheet equation. We know if this side goes up, then obviously the other side of the accounting equation goes up. And so when we go into assigning debits and credits, which don't have as much meaning, right, as this equation does, it's just that we assign debits and credits to be able to process quickly. So the rules are that an increase in asset gets called a debit, and over here, anything on this side that is an increase is a credit. And then debits equal credits. Increase on this side is an increase on that side. An increase over here is called a credit. An increase over here is called a debit. Now, having done that, let's look at these components of retained earnings. So liabilities go up with credits, common stock goes up with credits, and retained earnings goes up with credits. So since revenue is an increase to retained earnings, it goes up with credits. However, these two accounts, they reduce retained earnings. So let's go back down here. If we reduce that side of the equation, the other side of the equation has to go down. So we inverse our debit credit rules then. A decrease to asset is called a credit, where a decrease on this side of the equation gets assigned a debit. So then these two decrease retained earnings. Since it decreases retained earnings, expenses and dividends get assigned debits. Okay, that's just a quick overview of the debit credit rules. You probably already knew all of that, but thought I would throw that in here for now. Well, let's go back. If we are analyzing transactions, if we paid out cash, then we're going to reduce assets. Cash is going to go down. And then the other side of that is what did we get? So if we paid out cash at the beginning of August, and right, I'm back over here just in case I lost you. If we paid cash for rent at the beginning of August, we haven't used the rent yet. That is also an asset. I'm going to abbreviate it so I can get it on there. Prepaid rent. So This is an asset exchange. Nothing happens on the other side of the accounting equation. Cash goes down, it's an asset. Prepaid rent goes up, it's also an asset. So it's just an asset exchange. Cash is given up in exchange for prepaid rent. Then assign your debit and credit rules. Assets go up with debits, so I'm going to assign prepaid rent a debit. Cash is causing assets to go down. Assets go down with credits. I don't know why I moved over here. I'm sorry, I probably confused that. So assets go up with debits, so we're going to assign prepaid rent a debit. Assets go down with credits, and we'll assign that a credit. Then you would have gone over to your journal. I know you've already made a transaction. Let's see, this was transaction C, and it took place on August 1. And you would have already had some stuff written above. I'm just isolating this one transaction. And you would have debited prepaid rent. And you didn't have to write this out, but I always like to show myself that was an asset going up, and that was $6,000. And then we have cash is our credit. Credits always get listed second for $6,000. And then you would have gone and posted those two to your ledger. I'm sorry. Then we would have had transactions already in the cash account. I'm just can't show that to you. I don't want to go back and retrace all of that, but we would have posted a $6,000 credit, and you would have come up with a new, whatever the new debit balance would have been. And then you would have also gone over to prepaid rent on August 1. Did I do that wrong? No, I didn't do that wrong. I credited that right. Sorry, just double checking myself. We debited prepaid rent, $6,000, and that gives us $6,000 balance in prepaid rent. Okay, so you go through all of August. So A through M, we would have gone through and recorded all of these transactions all the way through M. So back here on prepaid rent, if we have $6,000, then I go down to the adjusting journal entries. And if I go to C, if I go to E, on E, it tells me, it's reminding us that that $6,000 is for the month of August and September. Okay, I'm going to jump forward a little. I kind of stopped for a minute and I tried to find some space to show something and not take up your viewing time. So what we have is $6,000 prepaid at the beginning of August. But we're here at this point in time at the end of August. Well, how much of it is prepaid at this time? Well, only September is prepaid, right? So we need a balance of $3,000 in the prepaid account because we know that $3,000 has been used or consumed in the month of August. And anytime I use a cost, that's an expense. So we need the prepaid rent account to have a $3,000 balance. So let's go back over here. I know the balance needs to be $3,000. Well, how do I get it there? Well, I'm going to get it there by reducing it or crediting it $3,000. So let's go back to our journal entries. And I'm going to do this in a different color. But on August, whoop, I thought I was going to do that in a different color. On August 31st, right, you've got adjusting journal entries. And I don't mean to be confusing you, but right, you would have had transactions all the way through M, and then you would start your adjusting journal entries that are dated August 31st. So I'm going to put AJE, and you would have all of these adjusting journal entries, and I'm working on E. Now on E, we know we need to reduce prepaid rent, the asset. So I'm going to credit prepaid rent to cause the asset to go down $3,000. And I also need to record $3,000 of rent expense. Remember, expenses are debits. Right? We went through those debit credit rules. Expenses cause retained earnings eventually to go down. That's why it's a debit. So my adjusting journal entry is for $3,000. And let's quickly go post that. So on 8/31, I have a $3,000 credit. And if I have a debit of $6,000, I have a credit of $3,000. 6 minus 3 gives me a $3,000 balance. And then I also need to go post There's rent expense. Here we go. On 8/31, we had a debit to that account of $3,000, and that gives a $3,000 balance. So now, right, we had a $3,000 in prepaid, and we have a $3,000 balance in rent expense. And that's our adjusting journal entry, and and how to solve for those. Okay, I'm at 10 minutes, so I think I'm going to stop this recording, and if you have more questions, just let me know.